On YouTube, welcome back to another video with the House Money Investing channel. In today's video, I got about 60 stock picks for you, so we're gonna try to get into it and make this one quick. I don't want to spend too much time making this video, but I do want to bring these stock picks to you guys so y'all can check them out. First ticker we got is SPMB. This is a Spider ETF. It's a managed back bond ETF. So I like putting my money in bonds. It's a nice, safe place to put your money. Something with low volatility, low fluctuation, and it's something that's usually going to pay a nice, pretty solid dividend. So it's pretty similar to a savings account, except for you're actually going to get some nice returns of interest. Whereas a savings account, the return percent is less than 1%. A high yield savings account may get you 1 to 2%, but these usually get you anywhere between 2 and 4. Some are higher. This particular one has a dividend payout of 2.94. Like I said, it doesn't fluctuate. It might move up maybe 1 to 2% up or down either way, but it's not going to move very much. So it's great, definitely a great place to store some cash, to have a hedge against the fiat currency and a hedge against the stock market itself. Next we got ticker SCHW. This is Charles Schwab. This is a position I'm in long term. I'm up 16.91% of my position. Pays a dividend yield of 1.22. Pretty good PE ratio of 27. This one here, was beaten down about 30-40% during the pandemic. Finished the year up 22%. On average, this one's going to grow about 20%. So it's a nice growth with the nice dividend yield. Very strong analyst ratings, about 99% buy hold ratings. And Charles, Schwab is a scalable and vertically integrated business model. Should enable it to convert increasing percentage of revenue into earnings and be in the better parts of the value chains as the investment service industry evolves. Merging with TD Ameritrade will come with material revenue and expense synergies at a time when the normal earnings drivers of rising stock markets and interest rates may be absent. Charles Schwab is solidly its position as a leader in investment services and may be able to expand into other financial services. The EPSs are, they haven't been great, but it recovered Q3. And this is an investment service company out of California. And basically it's a savings and loan holding company which engages in wealth management, security brokeraging, banking, assets management, custodian management, and financial advisory services. So a nice hedge fund, nice financial play right here for Charles Schwab. I love their ETFs. I use their app. Just all around a great play. And then we got a Charles Schwab ETF here, SCHF. This is an international play, so this is going to give you exposure to markets outside of the United States, which is always good to do. The best way to do that is through an ETF. It'll give you a nice diversification over that market. You got your regulars like your NEOs and your BABAs and stuff like that, but on the regular, it's going to be hard to pick a good company from international parts of the world, just because you may not have a direct understanding or following of those specific stocks. So getting an ETF will kind of be a safer play. This one here grows about typically about 8% a year. Nice dividend of 1.99%. Pretty decent PE ratio, and it tracks larger mid-cap stocks in developed markets, out of the except for the United States, so it's international. Then we got SCHG. This is our large cap growth stock. So my whole long term, I'm up 4.03%. Collecting a very small dividend of 0.51, but that's okay because this is more of a growth stock, and this one grows on average about 30% a year. This is going to track the best growth stocks, in the U.S. that have a large cap, cap market. So you're going to get some great companies with some great growth. Then we got BLOK. This is a transformational data sharing ETF. This one here is a fairly new IPO back in early 2018, but on average it's been growing about 20% a year. Does have a nice dividend of 1.58, super low PE ratio, so super undervalued. It's active management portfolio, and it's gonna basically focus on blockchain technology. So this is gonna be a play into the blockchain without, you know, all the high side risk. Next up, we got BLCN. This is a trust serum NASDAQ Next Gen Economy ETF. Typically grows about 11% a year. You know, pretty small dividend of 0.56, decent PE ratio, and it you know, it's going to track global companies involved in developing, researching, or using blockchain technologies. So once again, another diverse play into the blockchain. Then we got ticker KFVG. This is a China 5G semiconductor index. So this is going to give you exposure to the semiconductor and 5G sectors of the market. Kind of a 2-in-1 play. This is a new IPO that just released, you know, this year back in November. It's up 11% so far. It's going to be more of a growth play, with the semiconductors and 5Gs are going to be a big hit for next year. And you know, it's going to track Chinese companies in 5G and semiconductor related industries. So it's going to be giving you the international exposure plus exposure to 5G and semiconductors through an ETF, which is going to be you know, a safer play. Then we got a Next Gen Economy. This one here is a fairly new IPO as well. Started back in March of 2020, right, you know, after the crash of the market. So of course has been doing well, up 100% on the year. You know, smaller dividend of 0.39. This is more of a growth play, and it's an actively managed fund as well. And it's going to track companies that are involved with 5G enabled digital economy. So another play into 5G as well. Then we got ticker FIVG, 5G. This is a next gen connectivity play. This one here, you know, started back in March as well of 2019. It grows about 6-7% a year. You know, small dividend of 0.96%, decent PE ratio, and this tracks a tier weighted index of global entities related to 5G networks. So once again, another play into 5G, which, trust me, 5G is going to take off next year. So you want to be in these plays, or at least have one or some exposure to 5G. Then we got XLF. This is something I've been swing trading. It's a stock that I've already went over plenty of times if you want to check previous videos, but it is a spider fund. Then we got TSM. This is another play that I'm already went over plenty of times as well. It's a semiconductor play. Just into that space, I'm not going to go too in depth with this one. Then we got XME. Once again, another play that I've already went over, that I'm already into. It's a S&P 500 metals and mining ETF. So the best metals and mining companies out of the S&P are going to be, you know, in that play. Then we got a PIC, ticker PIC, which is a global select metals and mining producers ETF. So exposure to precious metals. Once again, already a stock that I own. I've already made videos on it, so I'm going to keep it going. Then we got AIO, which is an artificial intelligence and technology opportunity fund. This one here is going to be a growth play. It's a fairly new IPO'd October 2019. It had a pretty good year in 2020, up about, you know, 37% or so. It's also going to pay you a nice dividend of 3.55%. So this is kind of a growth dividend stock. And what this company is a fund that is a diversified, limited term close and management investment company. Its objective is to provide total return through a combination of current income, current gains, and long-term capital appreciations. So a nice artificial intelligence play there. Then we got ticker THNQ. This one here is a Robo Global Artificial Intelligence Fund. Again, as you can see, I'm just changing sectors, giving you guys exposure to all the markets that are going to blow up next year. 5G, cloud services, AI, etc., remote work. This one here started back in May of 2020. It's up 65% already. Very small dividend of 0.27, but that's okay because it's more of a growth play. And it tracks companies involved in developing the technology and infrastructure, of enabling artificial intelligence. Then we got ticker AIQ. Once again, another play into artificial intelligence. This is by Global X. This is their fund here. This one also is a newer IPO, started May in 2018. Had a great year in 2019, up 49%. Very small dividend of 0.49, but like I said, it's okay because it's a growth play, and this is gonna deal with companies that are involved in artificial intelligence and big data. Then we got IROBO. This is something I already hold long term, something I've already went over in previous videos. I'm currently up 21.19% on this play, so this is definitely a nice play you guys might want to take a look at. Then we got a Vanguard fund here, ticker VWO. This is also something I'm already into that I've already went over in previous videos. And then we got ticker KORU. Sorry about that. And this is a Southern Korea Bull 3 times the share index, which this one typically grows about 30% a year, and it's a 3xer. So dividend really is non-existent at a 0.01. This one provides 300% daily leverage exposure to a cap weighted index of large and mid-cap South Korean companies. So once again, some international exposure. A 3-time leverage stock is going to be super risky, but it's going to have a lot of reward as it has worked out, pretty well. So definitely something I'm gonna get into. This is a South Korea ETF. This is not a triple leverage, it's just a regular play. And this one, IPO'd back in 2017 in November. It grows about 6% a year, 0.89% dividend, undervalued at the moment, great PE ratio, and it tracks market cap index of large and mid-cap South Korea companies as well, without that triple leverage. So if you want that exposure without the risk, then you can go ahead and get in that one. Then we got IWFH. This is iShares Virtual Work and Life multi-sector ETF. And this is a remote play. As we seen with the pandemic, a lot of companies did work from home, and a lot of companies are going to continue to do that because they're going to save money on rent from office buildings and things of that nature. So this will give you exposure to that sector with a nice diversification with low volatility. This started back in October 2020 and ran up 20% very quickly. Very small dividend, 0.35. But this is, like I said, is going to be a growth play, and this is a sector that's going to explode even more. And this tracks companies that are invested in around the globe that are involved in supporting individuals virtually and remote way of working and living. Then we got ticker WRK. This is Slack. I have several different positions in Slack over several different portfolios. In my Robinhood portfolio, I'm up 28.75% on this position. So a stock I've went over plenty of times, so I'm not going to go over it again. Then we got ticker CAPE. This is an iPath fund here. This one here grows about 20% a year as well. Not a dividend payer, but it's more of a growth play. It tracks an index that selects 4 sectors in the S&P 500 using long-term relative value and price momentum. The 4 sectors are equal weighted. Stocks in each sector are cap weighted as well. So unique, great play there. Then we got ticker WIL. This is an iPath Women in Leadership ETF. I own one of these in stash called Women Who Lead, which is very similar. This one here grows about I'd say 14% a year. Doesn't pay a dividend, but it's a nice growth play, and it tracks firms with women's that are CEOs or board members. The index picks a maximum of 10 such stocks from each sector. Stocks are market cap weighted as well. Then we got ticker RODI. This here is a return on disability fund. This one here grows typically about 18% a year. Not a dividend player, more of a growth play. And it's an index of 100 U.S. stocks issued by firms. Positive treatment towards disabled people regarding their workers, customers, and productivities. Stocks are also screened for positive earnings and equal weighted. So a nice play as well. A nice unique play. Like I said, I'll be bringing you guys some unique picks that you probably never even heard of. But these are good plays. Then we got an iPath Series B Carbon. This one here is also fairly new. It's been out for about 14 months. It's up 31%. It's a growth play, no dividend here, and it tracks an index of the most liquid carbon related credit plans in the world. So great, another unique great play here. Then we got XVZ. This is a S&P Dynamic VIX ENT. This is another unique play. Grows about 8% a year, no dividend, and it tracks an index that can be that can take long or short-term positions on futures contracts. On the CBOE volatility index, depending on implied changes in forward volatility. So once again, you're gonna see some nice plays, some unique plays. Then we got D-Box, something I'm already into. I've went over it several times. This is a buffer ETF. And then we got Li Auto, another stock I hold long term, that I went over several times as well. So we're not gonna go over it again. I will let you know that I'm up 13.17% in the position that I hold long term. Then we got ARE. This is a nice play into the real estate market. This is going to give you a monthly paying dividend. This one grows, let me see, about 18% a year. Great dividend of 2.56. Very bullish annual ratings, 90% hold, buy, 10% hold. EPS is great. Real estate company out of California. And it's a urban office real estate investment trust which engages in the ownership, operation, development, and redevelopment of life science and technology properties. It also provides a space for lease to the life science and technology industries, which are primarily located in AAA urban innovative cluster locations. So another unique play and exposure to that real estate market and exposure to the technology and healthcare segment. Then we got XLRE. This is a real estate select sector spider ETF. Another monthly dividend payer. Give you exposure to that real estate market. This one, it only grows about 3% a year, but that's okay because they can get the nice dividend payout of 3.23%. So you're going to get about 6 to 7% return on your money. And they track its index track REITs and real estate stocks, excluding mortgage REITs, from the S&P 500. Then we got JDIV. This is a U.S. dividend ETF by J.B. Morgan. This one here is going to be a nice dividend payer. Fairly new IPO back in November 2017. It's up 11%. Dividend is 4.41%, so very nice payout. It's super undervalued at the moment, and it tracks U.S. large cap companies with higher dividend yields, weighted for greater exposure to sectors with high risk adjusted dividend yields. So another great play to be into. Then we got some international stocks here. Ticker BZUN. This is a very good growth play. On average, believe it or not, it's been growing about 90% a year. Very strong analyst ratings. 80% hold, 20% buy. Killing EPS. Software company out of China. This is in the e-commerce sector. And this is it's a holding company through its subsidiaries. It provides brand electronic commerce, e-commerce services and solutions. Its services include apparel, accessories, appliance, electronics, homes and furnishings, food and health products, beauty and cosmetics, fast-moving customer goods, and mother and baby products, and insurance and automobiles. So they pretty much sell anything through the e-commerce site through its subsidiaries. And then, like I said, it's a great growth play. It's really killing it. Then we got ESGU. This is an iShares ESG play. ESGs are some great stocks. They're the exact opposite of what a sin stock will be. This one here, on average, grows about about 10% or more per year. Fairly good dividend of 1.24%. Nice PE ratio. And it tracks an index composed for U.S. companies that have been selected and weighted for positive environmental, social, and governance characteristics, which that's pretty much what a ESG is. A company that has positive environmental, social, and governance characteristics. And I'm going to expose you to that market here with more than a few plays from iShares, for these guys. This is another one here. Growth is about 12% a year, 1.24% dividend, very low PE ratio, nice undervalued stock here. And it's an index of large and mid-cap companies from emerging market economies. Stocks are selected, on positive environmental, social, and governance characteristics. Then we got SUSA, another iShares fund dealing with the EGS market. This particular stock here grows pretty dang well, about 20% a year, 1.14 dividend payout. And then we got ESGD, and these will have some overlap, but it's okay. You don't have to get into all of them, which I will, but you don't have to. This one's up 8% a year, dividend payout of 1.57, and this is the international companies that have been selected for those same ESG standards. And then we got SUSL, once again another iShares fund. This one grows about 7% a year. Dividend is 1.35. Great PE ratio, and it tracks U.S. and large and mid-cap firms with the highest ESG ratings as well. And then we got SUSC. This is a corporate bond ETF dealing with the ESG market. It grows typically about 5% a year. Decent dividend of 2.22%. And it's gonna be bonds dealing with that ESG factor in it. So a unique play into ESG. Then we got EAGG. This is an aggregated bond ETF dealing with ESG. Usually grows about 2% a year. Decent dividend payout of 1.65. Then we got LDEM. This is another ESG play. This particular play grows about 12% a year, decent dividend of 1.81, low PE ratio as well. Then we got SUSB. Once again, another iShares ESG play, and this is a bond again. This one grows typically about 2% a year, nice little dividend of 1.88%, and it's going to give you that ESG sector as well. Then we got ESML, another ESG stock. This one's going to be the best ESG stocks that have a small cap in them. This one grows about 8% a year. Very, very undervalued at the moment. Dividend payout 0.94%. Then we got ESGV, which is a U.S. stock ESG. This is something I hold long term, something I already went over in the past. I've been exposed to this type of market, so that's why I added more of these, because I'm doing well in the one that I have. I'm up 17.25%, and I've been collecting that 1.08% dividend yield. Then we got VSGX, and this is a Vanguard ESG international stock. So it's going to give you that ESG exposure in the international segment exposure and exposure to the Vanguard ETFs. This one grows about 4% a year, a little bit over 1% dividend payout. Then we got another Vanguard VCEB, and this is the ESG bond through Vanguard. It doesn't fluctuate more than a percent up or down, but it's going to give you a nice 1 to 2% return on your investment. Then we got FVD. This is a First Trust Value Line dividend ETF. So these are going to be great dividend payouts that are also at a very good value. It usually grows about 10% a year, while keeping that 2.28% dividend payout. And all the companies in this fund also will have over a $1 billion market cap, so they will be very reliable companies. Then we got an iShares Dow Jones International Select Dividend ETF. So this is going to give you the best international companies with the best dividends. So great exposure there. Usually up about 3% a year. Very, very good dividend payout of 5.14%. Then we got Overstock. This is a play I'm already into long term. I'm currently down 6.11%, but as you can see from the charts, this is a bounce back play. It was beaten down about 67% during the pandemic, and I mean it's just came back. It finished the year up 561% in the positive. How I'm down in my position, I have no idea. Then we got CGC. This is a play into the MJ sector. Also a long-term hold for me. I've already made videos on canopy growth, so I will skip over that one. Then we got SPSM. This is a Spider Portfolio S&P 600 small cap. So the best small cap companies are the S&P 600 companies, top 600 companies, is going to be in this play. This one grows, about 13, 14, 15% a year. Nice little dividend payout of 1.10%. Then we got SLYV. This is a small cap value ETF, similar to the last one. Instead of mid cap, it's small cap. These last two stocks are ones that I already hold and that I've already been going over as well. This one grows about 12% a year, decent dividend of 1.31%. Then you got SLY, which is a Spider S&P 600 small cap ETF, and pretty much the same as the last one, just a little bit of difference. This one here, the growth was a little bit better. It's about 16% a year, and the dividend is a little bit smaller of 1.04%. Then we got my favorite dirt cheap dividend stock right now is Bristol Myers, ticker BMY. This is something I hold long term. This is a company I've already went over before as well. This thing is beaten down. It still hasn't recovered from the pandemic. I expect about 4 to 5% growth out of this stock next year with a nice dividend payout of 2.94. Very good analyst ratings. Bristol Myers, their growth prospects are on a new cancer indicators and stuff like that. Very bullish, on their comeback. This is a pharmaceutical company out of New York. They have great EPS. It's just been beaten down. It hasn't recovered fully. It engages in discovering, develop, licensing, manufacturing, marketing, distribution, and sale of biopharmaceutical products. And then we got a ticker here, LGND. This is another play. Now I'm going into the pharmaceutical market. So this will give you exposure to the pharmaceutical plays. This one here doesn't really grow very much. It usually grows about 1% or 2% a year. It was originally came out as a growth stock. And, it's been pretty much stagnant, consolidating for a while without very much growth. But, with the healthcare and the pharmaceutical and biopharmaceutical companies, and the technology that they're coming out with, I see this one having a nice year in 2021. Actually a record year. I mean, they're good EPS, good analyst ratings, solid market cap. It just hasn't performed up to its potential. Then we got a play here that I'm already into, one that I made a video on yesterday, ticker MARA. And this is a play into the blockchain network as well. It typically only grows about 3% a year, but it has ran up massively, since Bitcoin has ran up. This one's ran up almost 3,000%, guys. Of course, they're killing EPS, and it's a digital asset technology company which mines cryptocurrencies with a focus on blockchain ecosystem and generation of digital assets. So all these companies that are going to need to be setting up digital transactions and things of that nature, this is going to be a company that helps provide that. Then we got another sector here. You see how I just transferred into another sector, right? Now this is in the blockchain sectors. The last stock and this stock, Riot Blockchain, one I've been watching for a while. I finally decided now's the time to get in. This thing has been growing about 200% a year, no lie. It spiked up in 2017, of course, dropped back down, and now it spiked up again. It pretty much rose as Bitcoin rose, and it engages in the provision of investment services to the blockchain ecosystem, as well as manufacturing its own subsistence. Its portfolio includes some nice cryptos. And that'll be the last stock pick of the day. Got that done about under 30 minutes, which is pretty good. If you like the video, hit the like button, subscribe, hit the bell. I got a link in the description. Hit that link for Robinhood, get yourself a free stock. Follow my journey. I'm going to go ahead and purchase 27 stocks and drop a video for that. Appreciate you guys tuning in. I'll see you in the next